Hi everyone, it's Paul Brown here from Wealth21. Happy New Year. Hope you enjoyed the festive period and you're all keeping well. So 2021 was a pretty good year for investment markets generally. However, at the start of 2022, we've had a correction in the Australian share market. So this video just covers some of the reasons behind that correction and puts it into context as well. So it's important to understand that anything in this video is just general information only. If you've got any questions relating to your own personal circumstances or you need advice, please give us a call. So let's look at the chart first. This is a 10-year chart. And as you can see at the start of, just right at the end here, in the last 15 trading days, we've had a 10% fall in the Australian share market. Now, that's not overly unusual. We have 10% falls or more pretty regularly over the past 10 years. So there's nothing unusual about that. And also in terms of context, we do have to remember that back in 2020, at the start of the COVID pandemic, we did have a 37% fall in the Australian share market over 21 trading days. Following that, though, we saw a pretty significant recovery effectively from March 2020 to the high in the market in 2021 in August. So that was a 67% recovery. But let's have a chat about why we've seen this correction in the share market in January. So firstly, there's three factors really. It's rising inflation and tighter monetary policy. Okay, so basically US inflation has been trending higher in 2021. And although the Fed initially thought that inflation trend was transitory, they now feel as though the inflation does need to be dealt with through monetary policy, and they've foreshadowed potentially raising interest rates as early as March this year. The other factor is Australian inflation, which came out last week, was higher than expected as well. We'll have a chat about that, but Australia's circumstances are a little bit different. And the second factor is ongoing tension between Russia and the Ukraine. Now that is on the news, so I won't comment on that any further, but those sorts of political conflicts do cause markets to become a little jittery. Okay, and the third factor that we'll chat about briefly is the disruptions to the economy from Omicron. So there's early signs in Australia, though, that new cases may be a declining trend. And I'll also show you a chart from Dr. Shane Oliver that looks at economic activity. So we'll have a look at that as well. But firstly, let's just have a look at inflation. So this is the US inflation chart. And as you can see, it's been trending higher during 2021. And now the Fed realizes they have to address inflation. The way they address inflation is they have tighter monetary policy. They increase interest rates and start tightening the economy through that mechanism. Australia, though, we have higher inflation. Inflation was quite low during 2020. Then it recovered to a reasonable level. The inflation in the last quarter was the year-on-year figure was 3.5%, a little higher than they were expecting. But as you can see, this forecast actually indicates that inflation may be lower in future. So we have to see how that all plays out. The Reserve Bank has previously said that they don't anticipate increasing interest rates till 2024. So we'll have to see how that all plays out. Unemployment is also another factor. So the Reserve Bank will consider all that and then look at the timing of interest rate increases. I want to have a quick look at the 10-year bond yield, because this is something we watch very closely. During so 10-year bond yield, which is effectively the risk-free return, it's the return you would get on an Australian government bond over a 10-year period if you bought it today, and it's currently about 1.9%. Okay, but bond rates, 10-year bond rate did fall from around 2.5% to 3% prior to 2019, and then in 2020 it was below 1%. For most of that period of time. And then since the start of 2021, it's actually been quite volatile. The bond rate, the 10-year bond rate has increased, then it reduced, and then it's increased again. And that's So when bond rates increase, it means the price of the bond falls as well. And that's why we've seen negative returns on some fixed interest funds during the calendar year of 2021. The final chart we'll look at is the economic activity tracker from Dr. Shane Oliver. And now this is a chart that shows economic activity compared to where it was prior to COVID. And Australia's the light blue line there. And you can just see that while it did fall during 2021, and that was obviously with the New South Wales Victoria situation, then we've had some sort of recovery as the economy's opened up, and then a little bit of a reduction now, but then a little bit of a rise recently, which is a good sign. So that all relates to restaurant bookings, job ads, just confidence and mobility generally. So they are good signs. Hopefully we are seeing better signs ahead in terms of COVID. So a few things happening. You're always welcome to make contact, send me an email, give me a call if you've got any questions. So thank you and take care.